Hi everyone, my name is Robin Speziale and I am the national best-selling author of a book called Market Masters. So today I want to share with you how to build a dividend portfolio and how to achieve $50,000 per year in dividends. How these companies pay you. So what I've done is that I started investing in stocks when I was 18 years old. It was in my dorm room at the University of Waterloo. I opened up my first brokerage account and started to invest in stocks. And since the age of 18 till now, I'm 30 now. I've been an active investor, and I focus on these capital compounder stocks. I focus on growth stocks. But my plan is that once I do build a $1 million portfolio, is that I will want to shift then to a dividend stock portfolio. And the beauty about dividend stocks, and you can find a lot of these dividend stocks on the Dow Jones, which has 30 large companies like Apple, or dividend stocks on the TSX 60, which is some of Canada's largest companies. You can invest $1 million across these strong dividend company stocks, and you can earn close to $50,000 per year in dividends. And you can actually decide to quit your job. You can achieve financial independence that way. Income taxes are non-existent or incredibly low if you're only earning your sole income through dividends. And this is the strategy that I plan to deploy. There's a lot of books out there, how to invest in dividend stocks. If you go online to Google, type in dividend aristocrats. I think dividend aristocrats is a list, an index that's updated every year, I believe. How do you find a dividend yield? So let's say that you want to invest in 10 dividend stocks. Each of these stocks is going to have a different dividend yield. Go to Google Finance, and for example, if you type in Bell, BCE, .to, you'll find there in the top right of Google Finance for Bell, you'll see the dividend yield. I believe currently it's hovering right around 5%. But I don't recommend this, but if you put $1 million, if you invest $1 million into Bell stock, and Bell pays you 5% in dividends, that's the yield per year, you'll get $50,000 per year from Bell. But the important part about this is to diversify, because Bell might have a bad quarter, they might have a bad year, and then the stock price might decline. So while you're still getting paid dividends, if the stock price does decline, you'll have a capital loss if you decide to then sell that stock. So it's important to look for not only large stable companies, but it's important to look at companies that are growing their dividends over time. So check out the track record of, I believe, I think it's like Procter & Gamble, a couple other big companies. A lot of the big Canadian banks, they have a good track record of paying dividends. You still want to see growth, but then you don't fall into the dividend trap, and don't buy stocks that have an incredibly high dividend yield. It's easy to get greedy. Like for example, if you're to buy stock in Chorus Entertainment. Chorus Entertainment is on the TSX. I think its dividend yield now is 12%. Once the dividend yield gets too high at 12%, there's a risk that the company management will cut the dividend. And once they cut the dividend, you're getting paid less dividends, and the stock price will fall with it, because people will sell the stock. So it's important to not get greedy in dividend stocks. If you want to build a $1 million portfolio and get paid $50,000 in dividends per year, you got to be smart about it, do your research. I hope this helps. If you have any more questions for me, you can send me an email at r.speziale@gmail.com, or you can go to my site, robinspeziale.com. You can find my email there, and you can find some more blog posts on investing in stocks. Thanks, guys.